All right. Hello. Welcome back to another market open on February 2nd, 9:20 a.m. Eastern Standard Time. It might be afternoon for those of you in England. I think, 8 p.m.? No. 9 plus 6, 10, 11, 12, 1, 2, 3 p.m. for those of you in England. Hope you all are doing well. We are here and we're back again for Morning Open. Cameron, what's up? Philip, what's up? Arvin, Heavy, this rally is crazy. Yes, it is. Sasky, Vincent, Kid Spellinger, no sleep, but I'm up. That's how you got to do it some days. Cash King, Seth Roth, Geist, what's up? Oh boy, Zoe Cold, Sethy Roth, Daniel Dibb. Holy shit, bro. Had the browser on idle for 10 minutes. My shat my pants when you talk. Could you imagine, like, you're in alone, the browser's on idle, then you hear this guy like, "What's up, everyone?" And you're like, "Who's in the house right now?" Here we go. I hope everyone's having a great day. It's 2:20 in the UK. Okay, makes sense. There's a lot of stuff to talk about. We've got Palantir running like crazy. We've got Sofi running like crazy. We've got the entire market running like crazy. I was live streamed pretty much all day yesterday, about 5-6 hours. We talked about Meta earnings. We talked about Sofi. We talked about Palantir. We talked about the Fed's rate hike decision. There's a lot to get into. So let's start it off, first of all, by starting with Palantir. First of all, thank you all for joining me. It means the absolute world. Let me pull up Palantir. Right now, Palantir is at $8.53. As you can see on the screen, it's up 4% in the pre-market. On the week, Palantir is up 15%. On the week, Palantir is up 15%. If you go to something like Sofi is up pretty nicely as well. On the month, almost 70% at this point, which is just insane. The bottom at 4 was amazing. On the week, 24%. On the month, about 61%. So it's a hell of a nice little rally. Let's get into Webull. Let's look at where else the market is going. The Fed decided to raise rates by 0.25 basis points yesterday, and I did not expect them to do that. I thought it was going to be 50. As a result of that, the rally, as much of a shock as it was even a greater shock to someone like me that honestly thought the rally was going to die. I thought there wasn't going to be any rally. Sup from Calgary, Amit. Dustin, thank you for being here. Calgary, I've never been there, but I've only been to Toronto. Would love to go to, Montreal. I haven't even been to Toronto. I've been to Montreal once with some friends, and it was like a day. So I have to explore Canada a lot more in depth. The S&P, you've got 414. I mean, this is insane, guys. This is insane. The S&P was at 340 in October. The S&P was hovering around 380, 390 for a long time. If anything, Tom Lee was absolutely correct this time about a bit of a rally. We are up almost 19% since the lows in October. And all of this feels amazing. The backdrop to this is I personally feel it's a bit euphoric for some of the issues we still have. It's not that we can't have a bull run. It's that maybe there's going to be a bit of a pullback before we really unleash the entire market. And if the economy is even ready to be unleashed, given some of the macro issues that are going down. Inflation is still 6.1%. It seems like the market has basically said we don't care. And the market has also said the Fed can't stop inflation because inflation is going down by itself. And as a result of that, there may be a world in which there is a actual soft landing where people don't have to lose all their jobs. Interest rates don't have to go to 17,000%. And we can consolidate an economy without having to constrain growth and stop the stock market from doing well. Now, if all this turns red, obviously, the sentiment is going to completely change. But for now, it's looking amazing. Microsoft up at 256, up 1% pre-market. Meta, got a lot to talk about with Meta. Up about 80% from its lows at $88 in November. Now it's October. Now it's $183. The top level key takeaways from Meta was that their ads business is growing phenomenally. They're cutting back on a lot of capital expenditures. They're getting rid of things that are not working. And at the end of the day, they have 3.7 billion people they reach every month. And every advertiser in the world needs to reach that many people. And so as a result of that, it's very difficult for people to, not reach those people. And that's why they have to go through Meta. That's it. That's why they have to go through Meta in order to get the job done. So, Meta pretty much hit it out of the park. Jason, good morning. J. Kim, we're rich. Blake, let me know if you come to Toronto. I will definitely let you know. You will know if I am in Toronto. Amit, love your market open streams, but it's not how you start, it's how you finish. Would love if you do a market close live stream. So I am thinking very seriously of that. The problem is it's in the middle of the day and I'm like doing actual stuff in the middle of the day. But if it's only 30 minutes, I think I can carve out the time for that. Like today, I'm going to New York and I'm going to be there the whole day. In fact, at the end of the stream, I will tell you guys why I'm going to New York. It's a bit of an exciting reason. So we'll talk about it near the end. But that's why I can't do the market open or close today. But I agree with you. I think the market close would also be really fun. And it would be cool to kind of begin the day and start and end the day. So, well, I will probably do it. Just might take me a week to get everything in order, and then we'll do it. Netflix at 366. Netflix now trading at a almost 105 price to free cash flow. $160 billion company. It's got Spotify up really nicely. Spotify now a $20 billion company. It's making no money. I mean, you know, some of these things are the only reason one can go like short against this rally is that some of these stocks that are up don't just like Carvana. Does it deserve to be 30% up? Probably not, right? Bed Bath and Beyond, I don't even think has come down. Yeah, it's Bed Bath and Beyond is up 20%. Like this is a company that is literally gonna. Okay, I don't want to say they're going bankrupt, but all signs indicate that they're not doing well, and it's up 20%. These are the things that make me want to hesitate from buying because it's a little. It's like some things have to correct before we get back in the clear. Like I wish the market was up and these stocks weren't up. Because then it would be like, okay, it's not just retail driven. It's like people actually putting their money into Meta and Palantir and Google because these are good stocks, not because, you know, we're just dumping our money to participate in the green. I am down 20% of my shorts right now. Yeah, Glitch, you are, I forgot you said yesterday, you are 2x short the market or something like that. Kelly in New York. No, it's not about Kelly. Bro, if you bought Tesla a month ago, you would be up 80%. That is true. If I bought Meta 2 months ago, I would be up 80%. You live and you learn. You live and you learn. But nonetheless, I mean, I'm happy that the market's up. I just don't necessarily trust that this is the rally. You know, a month into 2023, is it time for the rally? I don't know. Now, granted, I don't know anything, right? I don't know if this is if it's gonna go to crap or if it's gonna go super high. But when stocks are up 3 days in a row, the way they are, I think 2022 triggered us. This is not 2020 where every single day you had a new high. Like I remember every single day in 22, it was insane. I don't know if we're at that level yet. And I don't know if we can ever get back to that level, but slow sustaining growth would be awesome. The question is just if this is the time where it starts. 3x Glitch, can you give your short thesis in the chat, please? You are 3x short the market now. Can you explain why? What is the reason you are 3x short the market? Can you check on Gabe? Look, I haven't texted Gabe yet. I'm going to text him. I just, it's kind of one of those things where you want to check up on a friend, but you also don't want to like do it in a patronizing way, you know? And Gabe tends to feel patronized sometimes just from my interactions with him. So if I check up on him, I want him to feel that I'm genuinely checking up on him, not checking up on him just to like say that he's down or make him re-explain that he's down because I already know he's down, right? He obviously doesn't, if you've seen any of his tweets, he doesn't believe any of this is real. So there's one thing there. But yeah, that is what's happening. The problemation is valuations for a lot of companies didn't deserve to be slowed down. So I want to give a shout out to Chris in the chat. Chris, if you feel comfortable and you want to send me some screenshots of these calls, Chris absolutely called the bottom of Meta. It's not easy to call the bottom. He called the bottom in what is it, November, and he bought heavily. He put in close to, I think, over 100 grand of his own money, and I think now he's up close to 100 grand. So Chris Patel, we got to give him a shout out in the chat, even though he doesn't like Palantir as much as we do, even though he told me last night he's thinking of potentially getting into Palantir again after what he's seeing in FoundryCon. He definitely got Facebook right. So Chris, give us another stock because, you know, now that you are our resident calling the bottom guy, please let us the next stock you are thinking about so that all 255 of us can go YOLO calls just like you. And so we can be up like you. We can be rich. Like this is what we need to know. This is what we need. But in all seriousness, it's hard to find a bottom and it's hard to call it out. And I don't think I've accurately done one yet in my career as an investor. Chris, he got Meta right, and now he's reaping the rewards of it. And if Meta flies to 250, he's going to be up a house, literally. So want to give a big congrats to Chris. Look at that. There we go. All right, 9:30 a.m., February 2nd, 2023. The stock market is now open. Wake your ass up. Meta up 19% in the opening bell, $182.27. There we go. That green candle is so green. Google, look at this, up 5.7%. Google, Amazon, Apple, all reporting earnings today. Now Google at 107. Obviously, Meta did a really good job for Google. Google feels really good. And so, you know, advertising stocks are going to benefit from everything that's happening right there. We've got Carvana up 27%, Bed Bath & Beyond up 18%. The NASDAQ crosses 12K in the opening bell, 12,075.56, up 2.2% in just 49 seconds. There you go. The NASDAQ crossing 12,000. That's a big psychological barrier. The NASDAQ was at 10,000, like 80 or something just a couple months ago. S&P passing 414, now at 415, up 1% in the pre-market. Palantir up 4.2%. I have a video coming out today about Palantir's new $50 million extension with Sofi Holdings. Palantir's Alex Karp also did an interview with Bloomberg. I reacted to that. So 2 Palantir videos coming for you guys today. It's up doing nicely at 853, doing very well. Sofi rolling at 766, up 3.7%. Snapchat even. Snapchat is like, hey, Snapchat, why don't you participate in the rally? Up 5%. Snapchat's like, hey, we're going to have some fun here as well. Amazon, look at this bad boy. Hold on. It's at 111. What was the 1 year on Amazon? The low was 81. 81. So let's do some quick math right here. 111 minus 81 divided by 81 times 100. 37%. Amazon is up 37% since January 6th. So less than a month. You're 37% on Amazon. Coinbase, $69. It was at 31. So this is up close to 100%, a little bit more than that. Coinbase doing very well. So that means ARK. Let's go to ARK. ARK should be doing decently. Apple closing in close to $150. ARK at 43. Not bad on ARK. It was at 40 yesterday. So it's up another 4% today. Tesla, 185. Tesla broke through the 180 barriers. This is closer to my average now in some accounts on Tesla. Now at 185, up 85% from the lows at $100. We've got Shopify rallying. We've got Uber rallying, Teladoc rallying a little bit. Netflix at 364. Enphase 232. Expected this one to rally as well. Taiwan Semiconductors 96, closing in on $100. Goodness gracious. This is what we call a green market, or is it a bear market rally? That's the question. That's the question. And look at Chris. I bought calls on Amazon last week. This guy is going to get so rich, he's going to buy YouTube instead of watch YouTube. Goodness gracious. Chris Patel. Been telling everyone on Twitter. That's why you guys should follow Chris on Twitter and follow me on Twitter as well if you're not following me on Twitter. Here we go. Darnton's in the chat. We are rich. Amit has had a lot. Guys, I haven't had a single drop of coffee. I woke up. I had this Gatorade from last night. There's the energy is purely the green from the market that I'm getting. DNA up 6%. Chicken Genius and Tesla economists, bears must be so mad that Tesla's up. What a weird time we live in. Yeah, I mean, the people that sold, first of all, even though I didn't buy the dip on Tesla massively, I definitely didn't sell the dip on Tesla. So, I mean, it's like, I don't know why people were selling necessarily. I mean, especially long-time bulls. I don't get why they were selling. I know they were trying to play this whole timing. And Chicken Genius got it right. He literally got it absolutely right. And then he buys back in right before it dips even more. And now he's like, I don't know. I would just have gone long and get that one thing right about seeing it go down, especially when the Fed was raising rates more aggressively. Bear market rally. Mike says, bear market rally. I don't know. We've got Meta 181 and Google at 106. Look at Meta's market cap now, $474 billion. They also announced a $40 billion stock buyback, which is the main reason the stock is also up. Also, my Palantir puts are printing right now, up 20%. I have some cash secured puts on Palantir and Sofi. And so I had a Sofi strike price of 5, Palantir strike price of 5. So I'm definitely, I don't think I'm going to be assigned those calls. So hopefully it retains that way. Spotify even rallying at 123. You know, this is the thing about a green market. When it's green, the market just, everything goes up. Even if everything's not supposed to go up. Like, did Spotify earnings justify a 10, 20% gain? No. I listened to their earnings call yesterday. I mean, Daniel Ek basically admitted that they made a bunch of mistakes in 2022 spending on podcasts. So you can't say this is the future. We spent $1 billion, but yeah, we made a bunch of mistakes. By the way, sorry we spent your money on shows that didn't do well. It's like, you know, there's some things that you're supposed to get reprimanded for as a company, and you prove that you can get better to the market, which is what Meta did. I mean, they spent too much on the metaverse and they got shellacked, and now they're proving themselves to come back. And so a lot of these stocks, I don't think have the fundamentals to justify some of these valuations, and particularly some of these price swings. I think a lot of this is just continue, like Coinbase, right? I love Coinbase. I think it was undervalued at 30, but it relies on Bitcoin, right? And so let's go to Bitcoin. Remember, Coinbase makes money off the fees from transactions on crypto. So Bitcoin, nice at 24,000. If Bitcoin ever takes a little bit of a dip, then Coinbase has to take a little bit of dip. And what's the stability of Bitcoin right now? No one knows. So these are questions to think about. I don't think they're necessarily bearish indicators at all. I think they're just things to think about. If you have a ton of cash, for example, I have 35% of my portfolio in cash, I wouldn't buy on this day or load up in any of the green because I want to see a little bit more. And if that means I get it at a little bit more expensive price, that's okay. But I would like to see a little bit more. And again, even if this is also something I've learned to work on, just because you miss the bottom does not mean you buy immediately. It means you wait, you understand a little bit more, right? You don't just go YOLO in, because then if something like, for example, what if Meta tanked during earnings? You didn't catch 100, but at 150, you load it up and then they tank. And now you're stuck holding this bag at 150, which is exactly what happened to people that bought during the earnings in 2022 February, when the stock tanked like 40% in a day. And so these are things you really got to think about. They're really things you got to think about before these arguments make sense. Sell, cover calls. Yep, that also makes sense. Palantir is just starting to hit. Wait till Apollo income starts coming in. Yeah, we got to talk a lot about some of the new Palantir stuff that they're announcing in FoundryCon. You DCA and you hit both the bottom and top, and you end up average. Yep, and that's for most people. Now, Palantir, they came out with a bunch of they have FoundryCon. They came out with a great interview yesterday, and I'll be reacting to their interview today. Yesterday, when I was streaming FoundryCon, basically, Alex Karp said, look, we created some of the best software products over the past couple of years. We're going to create some of the next new best software products over the next couple of years. And the people that are building Palantir believe in this mission so deeply. Now, the people that were presenting at the workshop for Palantir Foundry, some of them were speakers. A lot of them were really insightful, like in the healthcare space, just explaining how vital Palantir is. I think more of those people talking about the value of the product when the market finally gets it. And again, they have to pull up the numbers to be able to justify that. But when the market finally gets it, it's going to make sense. Now, Alex Karp all but basically said, look, Q4 numbers, I can't say anything, but U.S. growth is very impressive. I'm expecting significant U.S. growth, because that's what the CEO just told me yesterday on a Bloomberg interview. He said, without saying too much about Q4 numbers, U.S. growth is impressive. And so if U.S. growth is going to be impressive, from a commercial sector in particular, that he said it's growing like a weed in the United States. If they can crack that growing like a weed in the United States, in Europe, in Canada, in Asia, like if they can do that, we've got something that could potentially get us that 60, 70% year-over-year growth, as crazy as that sounds, to average to the 30% CAGR until 2025. The question is if they can crack that. And, if we get out of a bear market, it'll definitely help for them to be able to do that. Here is a picture I just got from Chris Patel. His total return from November 1st, 2022, $56,000. He is up 151% on these meta calls since. That's really cool, bro. I've never had that moment where I could just be like, trade, sell, 56,000 comes to my bank. I never had that moment. I've had that moment with like 3,000, 4,000, but not 56,000. So I wait for the day when I can get it. Now, obviously, to get that, you need to have a little bit of money as well to play with that. But that's exciting, man. That's exciting. I just got the notification from Robinhood. Palantir is up 5.9%, 868 today. Do we crack 9? Do we crack 9? Do we crack 9? That is the question. Do we crack 9? Can we crack 9? Bro, and they are 2025. Yeah, his calls, by the way, are 2025. So if Facebook runs up to 250, which I think most analysts are saying that's kind of like the fair valuation, that would put it at close to like a $700 billion company. Chris is going to be up a lot of money. Like Chris is going to become an institutional investor in Facebook at that point. My Carvana puts are not printing. LOL, just initiated 6 more contracts. Yeah, see, and this is the problem with these rallies, is like some of these beautiful companies are not going to be up. I mean, so they're not going to be down because they're not good. So the good companies are up, which is raising the tides for all the other companies that should be down, but they're not down. So we'll see what happens. I obviously don't think Carvana is a stock to bet on for the long term. Eventually, the stuff corrects itself. We'll just see how long it takes. We've got Ray Dalio on CNBC saying that don't go Oh, sorry. No, he's saying do go with cash. Ray Dalio, cash position is now relatively attractive. That means he's a little bit more bearish on equities. Let's take a bear perspective. Let's not be super euphoric. Let's see what he has to say.
Welcome back to Squawk Box. We are joined by a very special guest this morning. Ray Dalio is at the table. Founder of Bridgewater is here. He joins us for an exclusive interview. And for the first time since he stepped down as co-CIO this fall, we should talk about that as well. But a lot to talk to you about. Nice to see you.
See you.
So help us try to understand what's happening. We always talk about the economic machine. We've got the Federal Reserve as part of that machine of sorts, at least trying to assess what that machine's going to do. You saw what Jay Powell said yesterday. I think we're all trying to make sense of where we really are.
Okay, well, I mean, these things happen over and over again. We're now in the 12th and a half cycle. You know, these cycles, you know how the cycles work. You're 12 and a half cycles since 1945. 1945 was the New World Order, you know, new monetary system. And you know what happens. So let me take you through it quickly. You get a funky economy, weakness, and so on. So what we had, of course, in 2020 with the combination of COVID, and then also the move from the right to the left, there was a distribution of wealth. And so how did you do that? The government had to send out a bunch of checks.
Yep.
And the Federal Reserve, where did the government get the money from? The Federal Reserve lent it. So we have an imbalance. And of course, that put a lot of money in the system. You've got the demand, you've got the cycle, classic cycle, right? Stimulation, credit becomes debt, then you have inflation, then you have a tightness of monetary policy. And so where are we? So we now in a classic spot where we've got a relatively high real interest rate. Real interest rates went from minus 175 basis points to plus 175 basis points, right? You've got a cash rate that's relatively high. Cash used to be trashy. Cash is pretty attractive now. You've got an inverted yield.
Say that again. You said trash is now more attractive?
Cash is
trash is what you used to say.
Yes, cash was negative,
right?
1.5%, 2% real rates. Terrible. Now cash is relatively attractive.
Right.
So it's attractive in relation to bonds. It's actually attractive in relation to stocks. You have the classic movement, of course, as rates go up and money becomes tight. You lose the parts of the economy, the parts of the market that are the bubble parts that needed the cash flow, right?
Right.
So you're seeing it reflected in not only, long duration stocks, those that didn't have cash. So you see the tech stocks come down, all of that come down. You see private equity, you see venture capital because they needed cash. All of that comes down. And then, so you're seeing a very, 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 very classic that we've seen these things for 12, and we're halfway through a 12 or 13th cycle, right? But what's also happening in that cycle, as since 1945, is that we then have the accumulation of a lot of debt and money. Okay, so we deal with things like the debt ceiling. Does the debt ceiling matter? Does it matter how much debt we have? And then you have a situation where there's used to be a free market supply demand, but now you've got the Federal Reserve who is now taking it, buying it on the balance sheet. So
all right, we're going to stop that there. We're going to go back into the market. Ray Dalio is basically just giving us an Econ 101, which makes sense, but we've got something to talk about, ladies and gentlemen, because if you are long on a stock that I do a weekly podcast on every week, you're up big. That it's not at 8. It was at $8. It just hit $8.02. Now it's at $7.97. SoFi stock, ladies and gentlemen, it's up 100% from its lows at $4.24 or close to 100%, and it's at $8. It is running. It is running. Goodness gracious. Palantir 880 up 7% on the day. Let's see if we can get this bad boy up to $9. Can we get Palantir at $9 freaking dollars? From experience, the market gives us a chance to get out before the big decline. Go study charts closely. Look, that's also not the worst thing in the world. I will blame no one for taking some profits here. I would blame absolutely no one for taking a little bit off the table. Usually you want to let these ride, see how they go. But if you take a little bit off the table, I have absolutely zero, qualms with that. I mean, like, that's like, look, hey, if you're up 30% in a week, you might want to take some profits and let the rest ride and see what happens. Wow, Palantir, keep up the grind, admit you never turned your back. I appreciate it, Brian. And, when Palantir actually has its moment, It'll be really nice to know that there was a community of people on the internet that really analyzed and cared about something, and we figured it out before the rest of the world figured it out. You know, that's the real fun about covering Palantir. It's like we all know the potential. Even the biggest of bears about whatever stupid concern they have, Alex Karp is crazy, whatever. They see the potential, right? They know it's not just another meme stock in the context of the quality of the technology. They understand, wait a second, like, even if I don't get it, I do understand that the tech is really good and it's blah, 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 blah. So everyone understands the potential. No one's willing outside of the community that we've created, you know, me, Chris, there's a bunch of other people I'm not going to mention, but all of us, you guys know who we are, that have decided to dedicate ourselves to like really analyzing and attaching ourselves to this upwards movement that we believe is going to happen because we know the tech is there. And so the other concerns are the other concerns. If we're right about this, it's just going to be nice. It's going to be like the Tesla folks that, you know, I'm not saying it's going to have a Tesla-like return, but it's going to be that type of journey, which is, I think, a little bit more fun than the return. Just following this journey. I mean, could you imagine, like, the next 3 years, we're just following this company, and one day it becomes $100 from $8, and we were all analyzing it at $8, and there's just this explosive growth. Now, that's a hard thing to pull off. It's not easy to do that. But if it does happen, it'll be really cool. It's way more fun than covering Snapchat all day. You know, and Palantir makes enough content and they do enough things. By the way, Sofi up to $8 now, where you have a lot to cover. You have a lot to cover. What is your average in Palantir? 1620 average in Palantir. So obviously, I can still buy Palantir. I don't care buying Palantir at super low levels because at $8, $9 because my average is so high, it doesn't matter. You know, I really don't care. So I'm fine buying it literally whenever at this point. If I can get my average to $10, which will take a little bit more money, I would be happy about that. Okay, let me check Discord because Rich Life just gave me their short thesis. So I asked them to do it. Let me pull it up on my Discord. And we'll hear from someone who has a reason for why you should not be excited about this. By the way, 416 people, thank you all for being here. I really appreciate it. It means the absolute world to me. Let me do one thing real quick before I pull this up, before I pull up the short thesis. Let's do this thing right here. Okay, so let's go to my chat. This, invite, copy. Okay, so I'm going to put my Discord link in the chat for those who want to join the Discord. I always forget to do this, but I'll do it today. And if it doesn't work, let me know. All right, Discord link is in the chat. All right. Glitch Life's short thesis. Here we go. This is from someone who is short right now the market. They do not believe in this rally. This is the thesis. Their argument is, in short, my entire thesis is something is going to break. Currently, Europe has enough fuel to last for a month and is cut off from a new supply of energy except by ship 3 consecutive weeks of cold weather can wreck their economy. Ukraine and Russia collectively provide 30% of the world's grain supply and 40% of the world's fertilizer. All of those exports have stopped. China is reopening, which means the demand curve is going up significantly, which puts further squeeze on those commodities and creates a worldwide shortage, which is not only inflationary, but can cause global famine and productivity loss, meaning as China opens up, there's going to be more demand for commodities. If Ukraine and Russia can't produce those commodities, that creates more inflation. Europe is on the brink. They have enough natural gas to fuel their economy for a month with no access to supply, and their biggest supplier is gone. The pipeline was sabotaged. The Fed has raised rates by several thousandfold. People look at the market and think it's just 0.25, but it was at 0.25 from literally zero. That's a multifold increase, and so many zombie companies exist purely because they borrowed debt to pay back debt, and those rates are not fixed and have ballooned. The number of defaults and bankruptcies that will hit the market will be catastrophic. Financial conditions are easing, which is inflationary, and over 50% of GDP is driven by the consumer. If you looked at bank earnings and Visa earnings, they have stated that we are screwed. The consumer has created $1 trillion of credit debt. It is not a matter of if, but a matter of when. Okay. Well, look, that's not a horrible case. That's not a horrible argument at the end of the day. Some people say we're already in World War III too. I don't know about the argument about energy because I feel like the market will be making a bigger deal if we only had 1 month left of energy for Europe. Even if you're factually correct about that, why is the market not acting like that's a big deal? Because that seems like a really big deal for me, but that's not happening. But it's not a bad thesis, especially with the China demand coming up. All right, Jeremy Siegel, he's here. He wanted 25 basis points. Let's see what Siegel has to say.
us now is Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business. Professor Siegel, great to have you with us. You know, the way the markets interpreted Jerome Powell yesterday is that it was a green light for markets to go higher. We saw the S&P add on 1%. We saw the NASDAQ up 2%. We saw the VIX come in. We saw yields come in. Is that the right message? Is that what markets should walk away with?
Yeah, I mean, I think we begin to see that Chairman Powell and the Fed are beginning to get it, in my opinion. It was much more two-sided. He acknowledged that the housing sector is really a faulty indicator, the way the Bureau of Labor Statistics. So he quotes inflation excluding the housing sector, because he said it's really going down, but we won't see it in the statistics to 6 months. So he's acknowledging a lot of the things that I've talked about and others have talked about over the last year, that inflation has come down absolutely dramatically. Now, will he do 2 more hikes? There's no way of knowing that. I mean, I think that the Fed really only knows maybe a week or 2 before the meeting that the hike that they're going to do there, and sometimes they don't even know. Listen, all we need is 1 negative payroll month. I don't think it's going to be tomorrow. It could be tomorrow. Maybe it's going to be first week of March. I think that really changes the whole narrative, because he said that's the last thing that's drummed tight. That's the labor market. We see the labor market break in some way or another. I don't think any more increases are going to be on the table.
Should markets get all excited about that one data point if and when it comes, though, Jeremy? Because it seems like what the markets have not latched onto, or maybe what the markets don't believe, is that once we reach that rate, once he is done with the rate increases, that rates will actually remain higher. Because that seems like the calculus, if you want to rally, you have to believe that rates will come down. I mean, that's sort of what it's all predicated on, right? This notion that they're going to start cutting in the back half. If rates remain higher, that's a whole different calculus in terms of what you want to pay for stocks.
Yeah, but I don't think rates are going to remain higher. I think they're going to go down dramatically in the second half because of the weakened economy, the control over inflation. They don't usually stay up when the Fed is in a hiking system for a year, the way the dot plot said last December. I really think we're going to have a big, large decrease in rates in the second half of the year because of the weakening economy and because of the dramatic slow of inflation. And I think that's what the market is looking forward to.
So in that scenario, though, why should markets go higher if we're going to enter an easing period because the economy is so terrible? I mean, why wouldn't markets look at that scenario as opposed to just be excited that we're going to be cutting rates?
Well, as important as earnings are, and they're very important, the discount rate, I mean, Ray Dalio was talking about it, right, is just as important, if not more important. If you bring down that discount rate, the market will say, hey, a mild recession or even a moderate recession for a year, I'll take that. And I think that's why I think the market still has a good chance of giving that 10 to 15% gain, the forecast that I gave on January 2nd, just 1 month ago.
All right. Shout out to the Daily Capital. Tristan, I literally just saw your message in Slack. I literally just downloaded the thumbnail. I'm about to end this in a second, then we'll upload. We'll upload at like 11 too. That's like a better time for us anyway, so it's better we upload 11. If you guys have not subscribed to the Daily Capital, please subscribe. 418 people. Thank you for being here. Please, if you enjoy some of my my live streams, this is one show that I'm very passionate about, and we just changed co-hosts. I used to do it with Tom Nash. Now I do it with my good friend Vitaly, and I'm putting it in the chat right now. Would really appreciate not even to subscribe, just go watch the last episode. I think it's really fun vibes. There's bloopers. It's interesting. It's 20 minutes of your daily market news in an exciting, interesting debate way. So please, please, please check out that show. And if you would be so gracious, you can subscribe. And then you can unsubscribe if you don't like it after a couple of days. But I would definitely at least check it out. Now, what Jeremy Siegel is saying is very interesting because he's been calling for this 0.25 basis points for a while. He was right about it. The Fed is right. And he was also right about this 10, 15% rally that he predicted back on January 2nd. The question now is the market able to sustain this? And I think someone in the chat had a good, Brian, he says, look, are we buying more Palantir or are we waiting for earnings? This is a good question. This is a really good question, because if this was SoFi, I would, and you asked me that question, I would buy more SoFi before earnings, because SoFi and their earnings, they've historically done very well after earnings in terms of stock movement. Even if the stock comes down, for that day, there's a pop, which is what happened this time. It's up like 40% after earnings, and the earnings were really good. Granted, the macro fitted that condition as well. In the context of Palantir, it's at 880 or 870 right now. If EPS craps the bed, which I think it will because of the SPACs, revenue growth barely beats, and we don't get to 1.9 billion in revenue, which we need $503 million to be able to achieve, then I don't know how the market shows us that much love. Remember, Palantir is up not because of anything Palantir related. I will say this again and again and again. Palantir is up not because of anything Palantir related. It is the macro. That is it. The market does not give two craps about Foundry Marketplace, about Ontology, about this, about that, about Alex Crop. They don't care. These are algorithms that are leading Palantir to go up, which I'm happy with, but it's not anything fundamental with Palantir. It's just that simple. The market does not care yet. And so if they have a bad earnings, then the market will take them down. So if I had $5,000 to spend, I would put a small amount of it if you wanted to spec before earnings, but I would wait, because historically earnings just don't go good for Palantir. We have to wait till earnings really start to go well, multiple quarters in a row, for me to be like, oh, like there's a guy who bought a 160 call option on Tesla right before earnings, and that printed really nicely, right, from 145. But Tesla always has done well for not always, but for the past couple of years after earnings has done decently for Tesla. So I think that's the same thing, same mentality to think about here. Earnings are February 13th. Mark it on your calendar. 4 p.m. It will be here. We'll start at 3:30. I'll have Chris join me, even though he's at work. I'll make sure he joins me. And anyone else who is big in the Palantir community who wants to join, they're free to join. The more the better for me. It'll be a party, and it'll be fun. SoFi will 3x by 2025. Remember, Anthony Noto will make $300 million in options if SoFi at least 5x's by 2026 for 60 days, meaning, well, from now it's like a 4x, but it has to get to $25. So if it's at $8 right now, well, now it's like, yeah, now it's a 3x. It has to 3x from here. But if it gets there, that would be awesome. You and Tom broke up. We did not break up. Tom just got way too busy for the show, so he couldn't do it. But, you know, Vitaly and me, I think it's a nice little duo. And Vitaly's been one of my good friends. He was the first person I thought of to do the show with me. Tom fully endorses Vitaly. He really likes it. I mean, Tom watches the show every day. He called me about it. And Vitaly's also just like, Vitaly's someone who has made a lot of money in the market with Tesla, with Enphase, with Bitcoin. So he knows that he's 46 or something. He's been around the market for a long time. He also has a computer science degree. So there's a lot of technical experience and business experience. He's also, his first, millions were made in real estate. And so there's a lot of stuff he can talk about from a lot of angles. And then I'm more of the young, naive, energetic guy. So I think there's a really good combination in that show. And I think that show can hit 30, 40,000 people one day, every single day. Right now it's at 2,000, but I think we can get there. So Daily Cowboy is really good. Vitaly and some other guy. I love the new show, man. Awesome. Vitaly's awesome. Thank you guys. It means so much. It means so much. Okay. That's it for me today. Thank you, everybody, for being here. Now, I said I was going to New York City, and I'm going to now reveal why I'm going to New York City for the rest of the day, okay? I will be outside of Gary Vaynerchuk's offices handing out this flyer. I printed 500 of them to VaynerMedia employees, his advertising firm, that walk outside of his office. Now, why are we doing this? Because if you don't remember, I met with Gary Vee in November, and I wanted to pitch him on my startup, and I met him for 30 seconds, and I said, hey, I have a really cool idea. Can we talk for 5 minutes? And in that 30 seconds, I was like, Spotify, Apple, they don't do audio discovery. And he was agreeing with me. He's like, yeah, actually, that's really true. And I was like, can I just get 5 minutes with you in January? Because if I got a chance to speak to you, I think you would really, really like not only invest, but think about this product seriously. And he said yes, and he hasn't responded to my email. So now we're going to guilt him into responding to this email. That QR code, you can scan it. It gets you right to that moment in the video where he promised those 5 minutes. Now, do I really care about getting the meeting with him? Yes, it would be nice to have the meeting. What I care more deeply about is the content that I would get from doing all of this, because I think it would be really awesome content about this guy going on this wild chase. And if you guys know anything about my startup, last week I went on a wild chase to do something. You can watch the video. It's like why I missed my morning stream. It's a couple videos down. It's like an hour, 40 minutes of me explaining it. That kind of inspired me to do even crazier stuff, because I think the content you get from that will actually create a little bit more momentum, and it'll be kind of fun and different to do it. So it's pretty cool. It's pretty cool. And this is just the small crazy stuff. I want to do even crazier shit than this. And this is kind of the energy I'm on for the rest of the year. That experience really put my back against the wall and made me feel, holy crap, we can actually we can build a brand out of doing crazy shit and people will be excited about it. And so it's exciting and we'll see what we can do. Kudos, brother. Don't forget your jacket. It's mad cold. Yup, it is cold. And that's the sad part about today. It's freezing in New York. What's the temperature right now? It's like 30 degrees. Temperature's what? It's 30 degrees and we're going to be standing outside all day. So let's hope I don't get a cold, but it's going to be cold. But nonetheless, we got to do it. What part of the city you're in? We're going to be in Manhattan. I mean, we're going to be, where's off Hudson Yards, which I believe is in the center of Manhattan, if I'm not wrong. So we're going to be there. Dress up as a pizza delivery guy. Studio in NYC, dude. Yeah, Chris, we got to do it. I got to hook up at your studio. Will you be live? No, I'm not going to be live, but we're filming the crap out of this. And look, my thesis is kind of very simple about this. I've analyzed what people are doing that have a startup that want to market it because I follow a lot of these founders. None of them are actually doing anything that is so holy crap, why is he doing that? They're all doing the same stuff, like talking in front of the camera. And I was doing that for 5 months. And I finally realized last week, bro, I gotta go all in. And so this is the little bit of an idea I have, and it's gonna be pretty cool. This is part of Amit's Netflix movie. All right, I appreciate you guys. Amit is aggressive. You got to be aggressive in this situation to get this done. I'm gonna have some aggressive exchanges with these employees, but eventually they're gonna be like, "Why is this guy handing out flyers outside of our company?" And eventually Gary's gonna see this flyer, and he's got to take the meeting, bro. You can't have every employee be like, "Hey, Mr. CEO, there's a guy passing out flyers. He said you promised 5 minutes to him." Because also, it's not like, "Hey, give me 5 minutes." It's you promised 5 minutes, mother effer. We need these 5 minutes. I need these 300 seconds now. We got to get things done. Love your show. Regards from Germany. Thank you, Jose. Appreciate it. All right, guys. I'm out. I have 500 flyers. Let's see what we can do. Follow me on Twitter at AmitIsInvesting all day. We'll be live tweeting. You guys will get to see the behind the scenes. I appreciate all of you so much for joining me in the morning opens. Last year, I had 0 people care about me. Now it's just amazing that 300 people want to hear me talk in the morning, and hopefully you get some value, entertainment, and information from this to start off your day and some energy. Go for it. Take the risks. Have a great day. Almost near the end of the week. Make sure you kill this week. I appreciate you guys. I will see you later today. Bye, everybody.